I'm here with Omar Khan, Head of Wholesale Capital at the Alceon Group. Welcome, Omar.
Thank you.
Omar, can I start with a categorisation question on real estate debt? Is it fixed income? Is it a real estate exposure, or does it belong in alternatives?
Well, I think certainly we take the view that it depends how it's structured. And when you look at conservatively leveraged or senior debt with conservative LVRs, I take the view that it's fixed income. Now, there are certain, types of debt, whether that's mezzanine or pref equity, that you could certainly argue might be real estate or alternatives, but certainly senior secured debt, given the low correlation to underlying real estate or equity, I think should be fixed income.
Now, what's the picture for the role of non-bank lenders in the real estate sector? Are the banks vacating that space or coming back to it? Where do you see that market evolving?
Yeah, sure. So if you go back to the GFC, the non-bank sector of total Australian commercial or corporate debt might have been 2%. I think it's now moved to almost sub 8%, but still well off global standards. And so we believe that, especially in Australia, non-bank, especially in real estate, has come to a tipping point where there's a maturity, both in size, sophistication, and investment professionals. So we see that market staying and growing because we can deliver. That is, the non-banks can deliver a service to the borrower community about timing of loans, structuring of loans, and being flexible with covenants, which the ADIs or the big banks probably find difficult to service.
Overall, how do you see the credit market, of which you are a subset, evolving in terms of greater acceptance across particularly the retail side of the investor space?
Credit, certainly we're seeing significant demand from wholesale investors, and the non-bank market was primarily supported by family offices and the wholesale or high net worth market to begin with, and we've seen institutions move into this space and we've seen increasing numbers of offshore investors investing via Australian vehicles but also setting up local vehicles. But in terms of retail, we're starting to see that transition. There have been some LITs that have listed in the market offering private credit to investors, private credit options to investors, and I think that's only going to increase. And I think certainly the hunt for yield makes that opportunity more and more attractive to fund managers like us.
And let's face it, that those traditional sources of where retail investors looked for yield aren't going to be back to the levels they might have expected for quite some time. So it's alternative investments like the ones you're offering that really are going to have their moment in the sun.
Yeah, look, I think you're right, and I'd sort of put that take that a step further and say I think it might be considered as alternative now, perhaps, but as the market matures, we'll see private debt as a permanent fixture of the fixed income portfolio, and I think that's certainly where global counterparts in the US and Europe are at, and I think that's where I believe Australia will move to.
Omar Khan, thanks very much for your time.
Thank you, James.
Thanks.